Welcome to the 2022 Economic Depression and Preparation channel. Thank you for joining me. I'm your host, Tony. Please be sure to subscribe to this channel for the latest interpretation of financial news in the U.S. and sometimes abroad. I appreciate your support, and I do read all the comments and very insightful and very in-depth comments from all of my followers. You don't want to miss not one episode here. This is your Sunday edition, December 11th, 2022. As we head into the fourth quarter here, and prices are rising, continuing to rise on both food, gas, and utilities. And that's very concerning for a lot of us in the Northeast, the Southeast, the Midwest, the West, and etc. Now we have to watch out for the Federal Reserve's meeting that's coming on December 13th and 14th of this week, where we're expecting a rate hike of 50 to 75 basis points. And this is going to be very interesting. And the UK recession could last 10 years, and that's what we're headed towards. The U.S. is going to be the next on the list to follow that trend with a recession, I say a depression that lasts anywhere between 10 to 12 years of our time. And it's just beginning in these early stages of 2020s as we begin to fall deeper and deeper into debt, deeper into different conflicts around the world that cost money, and infrastructure, public infrastructure and private infrastructure in America is on its way to decline. So let's get right into it, ladies and gentlemen. Wholesale prices rose 0.03% in November. This is more than expected, of course. This is despite hopes that inflation is cooling. If you remember last month, they were telling us that, well, the numbers went down, inflation numbers went down 0.05%. So, maybe things are getting better. Well, now, as of Friday, things are going up. The Producer Price Index, or PPI, is a measure of what companies get for their products in the pipeline. That has increased, again, 0.03% for the month and 7.4% from a year ago. 38% surge in vegetable prices has pushed the food index up by 3.3%, and this has been a concern now. So now the markets are really concerned because, as you can see here is the change. We're up to 7.4%. This is from a high of 10.2% at the beginning of the pandemic, or the beginning of the year, I should say. So this is going to be very concerning because now companies, the cost to do business, the cost to input cost is rising for these businesses on all sides of the country. And this is going to create a conundrum for the Federal Reserve Bank as they continue to raise rates, and interest rates goes up on auto loans, house loans, student loans, credit cards, everything. That means less and less people are going to be buying these goods and services, even over the holidays. And 5 things to watch for when the Fed makes its interest rate decision. This is by MarketWatch.com. Chairman Jerome Powell is trying to give us what we call, quote unquote, a soft landing on this economy. But FOMC meeting, the Federal Open Market Commission meeting, you can see that it's been jagged here with the Treasury bonds, the 10-year and the 2-year bonds here have been inverted for quite some time here. And what people are going to be hoping for, some junior economists and others, that the slowing down in the pace of rate hikes. If they slow down the pace of the rate hikes, people are saying that the stock market is going to surge, the Dow Jones, the S&P 500 and others. That may be true, but the stock market is not the real economy. On the ground, we're seeing more and more stores close. We're seeing prices of eggs, milk, butter, meats, household items at places like Lowe's, Home Depot, Sam's Club, PJ's. All of these places are on the increase and continuing to increase. And what if a person, a family of 4 or 5 has a car breakdown and they have to get a repair? You might as well say that's $1,000 emergency right there, because you have the labor cost of labor has gone up with mechanics. Some people can repair cars themselves somewhat efficiently, but some of the major repairs, if you're talking a transmission or an engine rebuild or a timing belt or something like that goes out, then you're looking at a major repair. Or a head gasket below. Good luck trying to get another used car, because the average monthly payment of used car is now above $700 a month, and that's not counting insurance and gas and emission stickers and all that stuff you got to get for it. So if we increase the Federal Reserve, if the Federal Reserve goes up by 75 basis points, this would bring the benchmark Fed rate to around 4.25 to 4.5%. Okay, now that sounds good, but the problem is that it's going to continue. The rate hikes are not done yet. The rate hikes are going to continue through 2024, basically all of President Biden's administration. So this is bound to cause a slowdown for and even for the next president. He's going to have to he or she is going to have to continue to experience rate hikes at a extreme pace, because they want the target rate of inflation below 2%, and we're at 7.8% right now. So the jobs report is strong, but it's not enough to quell the rate hikes. As you can see, signaling more rate hikes to come. We know that's going to be the plan. Will he get the Paul Volcker's 20% rate hikes back in the 70s? I don't think so, but it is going to be somewhere in the double digits before all is said and done. Maybe 10%, maybe 12%. CBI, CNN Business reported UK recession could turn into a lost decade. Here we go again. So now we had Japan's lost decade, and now the UK recession. They're in a recession right now, heading toward the depression. Whatever the UK does, the market does over there in the European Central Bank, that's going to affect our markets over here because of the globalism. And as you know, London has had is going to face a lost decade of growth, slumping business investment, and worker shortages. They had the rail strikes. We're talking about rail strikes over here. Britain is in stagflation, quote unquote, rocketing inflation, negative growth, falling productivity, and business investment. We kind of see the same thing that's happening in Germany and other countries in Europe too as well. Greece, Romania, Lebanon. Some countries in Africa is experiencing stagflation or deflation. So this is what's coming over here to America. We're going to have a lost decade, 10 to 12 years at least of flat growth or stagflation. Right now, the United Kingdom is the only G7 economy, that's the major economies around the world, that still hasn't fully recovered from the pandemic. Well, actually, this is kind of stretching here, CNN Businesses. I think the United States, we have not recovered fully from the pandemic, but whatever. This is what the article says. I didn't say that, allegedly. Soaring energy and food costs drive inflation to 41-year high in October, as you know. Strikes have become the norm. So workers, what are workers striking for? They're striking for better wages, okay? Because wages are not keeping pace with inflation, ladies and gentlemen. And this is what you have when you rely on a system of capitalism that doesn't pay, that only pays those at the top a golden parachute, the CEOs, quote unquote, and all of that. And I know people are gonna say, "Oh, you don't like the rich." No, I don't have a problem with super rich people. You know, great that you can live off the interest. The problem comes when when the companies don't reinvest that back into either infrastructure or into its workers that is doing the majority of the work here, the hard-working Americans. Instead, they take it and they ship it overseas to Thailand and other countries that, of course, they can get cheap labor and production while ruining the American economy, as you know. So, back to it. What's really going to be interesting to see heading to this weekend is, does the Federal Reserve increase the basis by 75 basis points, or do they go one full basis point on the interest rate? You know, it would be better if they just raise interest rates up to past the level of inflation, like 10%, and this will go through like 2-3 years of pain, and then we'll come out on the other side better. But instead, they decide this incremental way to kind of ease us into this next severe recession. So I don't know which is better. Let me know what you think. I know that a lot of American families have already begun to cut back on entertainment purchases, on vacations, and on food purchases at the grocery store. They're becoming smarter. We're all becoming smarter with where we spend our money at, what little money we do have. And, that's also a great thing to be commended. And that's what I preach on this channel. And everyone has known that that's what I do. I take my own things, and I lead by example, and I'm sure you guys are leading by example in your family and your friends. Continue to do so, because we're just getting started. We're not over with this, as you know. Just like this pandemic is not over. We had RSV, and now there's another thing's going to come out after that, and blah blah blah, etc., etc. So thank you very much. Get ready to have a blessed week as we begin another new week. I know Christmas and the holidays is coming. Don't get discouraged. Continue to decorate, to share the love of Christ. Christmas, the spirit of love, and continue to be with your family. So I'll talk to you very soon as we get into these meetings coming up on Tuesday and Wednesday with the Federal Reserve Bank. Thank you very much. God bless. I'll see you very soon.